Happy Friday, traders, and welcome to the end of the week. Overnight, we did have a central bank meeting. That was the Bank of England. Yes, they did cut rates. They cut rates from 4.25%, 25 basis points down to 4%. That rate cut was expected, but it was a split decision of the board. 5 wanted the rate cut, and 4 actually wanted to keep it on hold. So what we did learn is that the Bank of England is not rushing into any sort of aggressive rate cuts. So it was seen as a hawkish cut. So sterling just went north, and north in a big way. I think it probably did catch a few traders who probably went into the meeting short, off guard, and sterling did close pretty much in the highs of the day above 134, like 30-ish, and yes, it does look a bid for the time being. Moving along, there's been lots of tariff and trade headlines as usual. We just had the head of the Swiss state in the White House. She left yesterday without a trade deal. So Switzerland will be getting that 40% tariff, which is one of the highest tariffs globally. Not only that, late in the session we also heard that it looks like the US is also going to tariff gold, tariff 1 kilo bars of gold. Switzerland is the biggest gold refinery of the world, so it looks like a bit of a double whammy for Switzerland. Look, the Swiss franc has had an exceptional run the last 6 months. It's probably been the standout in the currency space, massive appreciation. So look, none of this news at the moment is obviously good for the Swiss economy, so it's not good for the Swiss franc. So I'd imagine, look, at least in the short term, this huge rally that we've seen in the Swiss franc probably is not going to continue, in the short term, I think the bias is to be selling Swissy. So we have seen dollar Swiss in the last session, bid, and maybe a cheeky long there's not the worst trade you could do. Also with Japan, there's been a lot of negative headlines there with Japan not happy with its trade deal. Trump maybe even putting another 15% on top of tariffs on top of Japan extra. And Japan, or what's worth noting is that none of these trade deals are actually legally binding, so countries can walk away anytime they want. But look, the bottom line is that these negative headlines with Japan and trade has been negative for the yen. The yen had appreciated in a big way after the jobs numbers last week, and we saw the big sell-off in US bond yields. So that has sort of slowed down that yen appreciation, and we did see dollar yen back trading above 147 for a good last couple of days. But look, it probably still is a buy, the yen, but as long as we've got to get bond yields lower again. Since the last sell-off from last week, we really haven't seen bond yields take the next leg lower. So when that happens, no doubt, I'd imagine dollar yen will follow, and bias certainly would be to get on that trade. Moving along, there's been some geopolitical news, a lot of headlines in the last couple of days that Putin, Trump and Zelensky possibly could meet up as early as next week. Obviously, markets starting to think that potentially peace could be coming on the back of those meetings. Look, there's been no actual set date or confirmation, but just a lot of talk that this is going to happen. Look, Euro did, on those headlines, did shoot up, and it's back at trading above 116. It obviously likes that, peace in Europe. And crude oil is also trading under $65 now and going back down towards the low 60s. So the crude market, maybe starting to think that the Russian oil may be back on the market. Gold, however, certainly doesn't care, has not followed any of those moves. Gold at the moment is back at 3,400. It's been one of the best trades this week, just trading up in a straight line. Obviously, the gold bulls are starting to look for those record highs again, up towards 3,500. But look, if those peace deals did happen down the track at some stage, in the next week or so, or weeks, gold is trading at these high levels due to a war premium that was built in a couple of years ago. It's bought on the back of the safe haven demand. So look, it may not be a one-way bet for the gold bulls. When we've seen reversals in gold, they have been quite sharp and aggressive. So certainly, I think you need to obviously trade with stop losses and keep your eyes out for headlines. Finally, some news last night that did move some markets as well is that Trump has signed an executive order to pave the way for crypto to be part of US 401k retirement funds. So that's a big deal because the retirement market in the US is worth $12 trillion plus, so that's a lot of money that could potentially be going into crypto. So we have seen obviously Bitcoin, a lot of the blue chip, ETH, etc. Crypto markets are obviously trading up, but it's actually floated all the crypto boats. So crypto is having a fantastic end of the week. Trump and his sons, his whole family are all very mega long crypto, so no doubt Trump's finances are loving this move. So if you see Trump in the pub, no doubt it's his shout. Look, going into the end of the week, really not too much on the agenda globally today to end the week. But next week we do have some very big data. That's US CPI for July that we'll be getting, and no doubt, with market now pricing in a September rate cut by the Fed. The only thing that could spoil it is if CPI does spike up. So that is going to be a big market release. Good luck with your trades at the end of the week, and have a fantastic weekend.